2014 stock market. What would Bernard Baruch do? I'm Bob Stokes, reporting for Elliott Wave International. Legendary investor Bernard Baruch kept his fortune intact during the great crash and decline of 1929 to 32. He possessed a deep understanding of market psychology. Baruch later described the months before the 1929 crash and why he knew it was time to sell. Quote, "Taxi drivers told you what to buy. The shoeshine boy could give you a summary of the day's financial news as he worked with rag and polish. An old beggar who regularly patrolled the street in front of my office now gave me tips, and I suppose spent the money I and others gave him in the market. My cook had a brokerage account and followed the ticker closely. Her paper profits were quickly blown away in the gale of 1929. End quote. And as this chart of the 1929 crash shows, that gale turned into an epic financial hurricane. Is the psychology that drives a historic market turn at work now? Well, consider this observation from the March Elliott Wave financial forecast. Quote, "The hit parade of indicators registering extremes in optimism just keeps coming. Retail investors are now more committed to the financial markets than they have been at any point since at least 1980. End quote. Extreme market psychology does not guarantee an immediate trend reversal, but investors ignore it at their peril. Bernard Baruch knew that psychology was driving the trend, and if he were an investor in today's environment, it's easy to imagine that he would already have taken steps to protect his portfolio. See what we're seeing in the market via a free 2-week trial of EWI's flagship financial forecast service. Get started now by following the link below.